Good evening, everyone. Sorry, I'm about 10 minutes late here. Had some technical difficulties. Uh, and I'm sure if you're here in Vegas, you know how daggone windy the day has been. It has not been a great day. So let's go ahead. Don't want you to get too deep into worrying about how the day has been going. Let's see how everything's been going in the market. And we'll try to figure this out a little bit ourselves, each other here, because guess what? Um, they made some major changes in the MLS. So first of all, even though I have to put my big update out, let's see what's happened so far. So last month, which was February, 1,781 units sold compared against 1,581. So actually more units sold. And look at that, median price has stayed the same. New listings on the market, $27.99 compared to 3,130. So that's interesting because fewer new listings came on the market as we are starting to head into the spring market. But we'll take a quicker look here to see what's going on. As far as the median price of those new listings coming on the market, $525 compared against $525 for last month. That's kind of strange. So units available last month before last was 5215 compared to 5229. We'll just call that about the same, which is up 50% from last year. 2.9 months of inventory compared to 3.3 months. So we got a little less inventory going into the spring months. Going to spend a little time. I'm going to lay back here, enjoy my hot honey V8 limited edition, and hope they're lying about it because this is delicious. Now we'll start looking at them condo units. Last month, 515 sold compared to 413. But look at this, median price, 303 compared to 293. Whole $10,000 more. New listings on the market, 957 compared to 955. Not a big deal difference. Median in January was 290 compared to 297. So that price is going up 2. Units available, 2025 compared to 1896. So back in January, it was 4.6 months of inventory compared to 3.9. So that is tightening up also. So the housing is tightening up a little bit. So let's see what is happening right now. So we're going to just first of all look at the actives, go with that single family, look at the results. So right now, $57.16 compared to, oh, look at that. So we are having more units on the available. So that is going up. That's good. And the median list is 549,999. So that is going up. That's interesting. That's for single family. Let's get on back here and we'll look at condos and townhomes. Unfortunately, they combine them. They're actually, in my opinion, a little bit different animals. 2221 compared to, so they're going up. So we actually have more months of inventory. And let's go look at these results. And what we got here. Huh, interesting. The median is 284,999 compared to, so the median list price of the new stuff on the market is actually down. Interesting. So let's get back into this criteria. There we go. And we'll start with single family because that's where most of y'all are interested in. And we're going to look at what has actually sold month to date. Sitting here petting the dog. He is nervous. So 717 have sold so far this month. And so far, oh, it still seems to be the same. 485. So the prices are holding steady. Prices are holding steady. Okay. Let's go try to look at those condos and townhomes. $197 have sold so far. Let's look at these prices. Oh, 312. 312. Okay. So that doesn't feel good. Okay. So yeah. Let's go back here. Let's go take a look at a few little quick stats. Going to try to get in, see some stats people like to see. So far, what has sold to date. We'll look to see how many had. You know what? I'm going to have to break this down because it's unfair. Because single family residence is going to be a little bit different. So 717, how many were had HOAs? 502, because I'm always getting people saying like, hey, I don't want an HOA. All honesty, let me go there. Let me put this in there, So what do we got there? 502 divided by 717. Math and public, 70% holds about steady. 70% of single family homes are going to be under an HOA. Usually it's going to be the older homes that are not in an HOA. And let's see if that tracks. Plus, a lot of them are going to be outside of the city. So 215, let's look at Las Vegas, North Las Vegas, and Henderson just real quick. So 192. Oh, this is going to be interesting because, okay, so I'm just going to look at the age. So 1942, 63. The newest one was 2024. That is surprising. Let's just look at a picture of this house. Oh, it's 1.3 million. So if somebody built this, that's his new house, not to have an HOA. Let's see if we can find a house that somebody can live in. 2002. Oh, let's see here. Okay, that house does not have an HOA. I find that hard to believe. That looks like a house with an HOA. So I just find it hard to believe. But I'm not going to get too deep into it right now. Let's see, how many of these suckers have pools? I got to get rid of the HOA thing. Hold on here. have 172 have pools. Oh, actually, in case you didn't notice, we've actually dropped the number to 680 once we just look at Las Vegas, North Las Vegas, and Henderson. Everyone's always looking for that short sale or repo. So repos, 4. So if you're looking for a repo, you think you're going to be getting a repo, saving the money, 4 of them. Let's take a quick look. There they are. Let's just take a look. This one was 447. This is what it looked like. Had a pool. Interesting. Okay. And let's see what we get for. I went back too far. 680. Let's look at short sales. There were two so far this month. Okay. Let's see, singles. Well, let's see. What should we go for next? Gated, which is a panacea, unless it's guard gated. Even with that, I'll tell you right now, those who are looking for gated homes, people here are too impatient. All you got to do is drive up to the front of a gated neighborhood, unless it's like one of these really small ones where everyone knows each other. Next person who drives in and has a clicker is just gonna let you in. Everyone knows it. It's just an open secret. I actually tried to. I moved in here. I was trying my code that the HOA gave me, and I would drive up to try my code, and I could never try my code because someone would keep driving up and hold on, lock on me. Oh, there we go. I would come up and try my code, and somebody would just drive up and open the gate. It's like, oh, dang, drive in, drive back. Hello, back on me. I would drive out, drive back up, and I would try my code again. And then as soon as I tried my code, somebody would drive in and use their clicker. Gate would open again. It's like, dang. Okay, drive in, drive back out. It makes you feel good. You know, it's one of those makes you feel good kind of things. Guard gated is better. Problem is, I know people who live in guard gated neighborhoods, unless it's one of those super rich places that have the roving patrols and stuff. And even with them, it doesn't really work that well. They have walls around them, and most of them, you can just jump over the wall. Because I know a person who lived in a guard gated neighborhood. Talk about how her kids jump over the walls all the time just to get around. It's a panacea, but it's better than nothing. Let's see, going on back here. Whoops. They keep changing stuff. You don't know where anything is. Everything gets changed now. Okay. Okay, so types of the sold terms. I had somebody send me a text just yesterday. I haven't been able to respond to them. They wanted to find a house with seller financing. Um, a lot of sellers have this incorrect. A lot of seller finances is actually AITD, because most people, to have true seller financing, you have to own the house. Most people who are selling don't own their house. Let's see how many were AITD. 0. Let's look at other let's see, lease options. You always have people trying to do that. 0. Owner will carry 1. Let's take a look at it. 4.2 million. 4.2 million. So let's talk about owner carry. Um, most people who are actually seeking owner will carry are business owners who have had a business less than a certain period of time. And the terms on an owner carrier, just to get them to where they have their their business record straight, where they can get some type of a loan. So they're usually for like 2 to 5 years, and usually it's like 10 to 20% down. So they have people reaching out going like, well, I'm looking for owner carry and or a lease option or something like that. Usually they're 10 to 20% down. And when I go like, do you have 20% down? It's like, well, no. That's why I try to tell people this stuff, and it's, I don't know, it's hard. But as you can see, that owner carry was a 4.2 million. So that person probably put half a million down or more. And they're, I guarantee you, we're a business owner. Okay, so let's go ahead, and now this is where I'm going to need some help because they have completely revamped this thing. So let's figure this out. First of all, I got to go for, okay, it's set to 7 days already. So 1,160 new listings on the market. I'm sorry, I just have to recalibrate my eyeballs. That is the most I have seen in a long time. So hopefully we're coming up to a good spring market, and hopefully people don't lose their minds. Sometimes when people see more houses come on the market, they'll just go, "Oh, so I'll just wait now that houses are coming on the market." You know, they've been begging. 208 back on the market. Usually these have fallen out of contract. Price decreases. This is the one that I keep warning people on. Do not overprice your house. You know what? I'm done. I had a whole discussion on this today with somebody. Nobody wants to hear it. They just want to overprice their houses and see what happens. I'm done with it. Price increases, I rarely understand it. Sometimes I do. Here is a problem I see that people do. They go in and they go in. Let's say they put their house on the market. Let's say they get feedback, and they need to get this, this, and this fixed. Well, they go and they spend $20,000 getting this, this, and this fixed. Then they want to raise the price by $20,000, $30,000, $40,000. It doesn't work that way. You fix your bathroom. Let's say you put $10,000 into it. It may raise the price of your home by $5,000. It doesn't raise the price of your home by 15. And that's why a lot of people screw up. So you see these price increases, then you see the price decreases. I won't get off of it. If you put a new AC in, oh, the AC cost me $25,000. I put in a 16 SEER or 20 SEER or something like that. Then they raise the price. Oh, I have a new AC. You have to have an AC. We live in the desert. You may be able to get another 5, 10. You're not going to get 20, 25 for it. And I see it all the time. And it's unbelievable that people do this stuff. Oh, I've decided to pay off the solar. And no, solar does, when it's paid off, at 4%. But they want to now price it at what they paid the solar off at. And the solar payoff was, 45,000, but adding 5% is 30. But they want to price at 45 because they just paid off 45. Doesn't add up. And that's why you see these people getting in trouble when they do this. Yeah, just don't do it. Under contract show, no show. You can see that does not add up to so that's like 900. So it's less than the new listings on the market. But it's more than the souls, which is 676 over the last week, which nowhere is near the new listings. Expireds are 88, which is I would say holding normal. Temp off markets, I'm not going to talk about them. Withdrawals, a lot of these people tried and failed. They just went like, you know what, I'm not getting the price I want. You don't get the price you want, you get the market. I'm sick and tired of talking about this stuff. 116 coming soon. I have not seen that in a long time. So now we've done that, I want to talk about this stuff. Actually, I want to talk about mortgages first. So I don't know if you've been noticing, mortgage rates have been coming down. Wish I had some kind of sound effect on that. So they have been actually coming down. You're now at what, 6 as of this afternoon, 6.78 nationally. These are not local. Your mileage will vary. We're going to talk about it just a second. I talk about it all the time. Mortgage rates are based on what the lender wants to make. They actually get to set their rates based on what they want to make. So you'll see this lender over here, they have a lower rate. That's because they said, okay, I want to be Walmart. I will make less per loan. And I've given in the past suggestions of lenders. I'm not saying that I use them. I'm just saying these are suggestions. And I've started being more careful on it because, and here's why a lot of realtors don't give you suggestions on good stuff. It's because you will do, um, you know, it's like every once in a while it does this thing. Um, you'll reach out and you'll go to the lender that will help you the best. But you see, the lenders want to protect themselves, and they have a slew of realtors they work with. Well, the whole point is the realtors are there to protect the loan. Well, great. Well, let's say I send you to such said lender. Well, they're going to say, "Well, are you working with a realtor?" We go, "Well, I saw this guy on YouTube." Well, are you? Did you talk to him? Did you sign anything? And then you go, "Well, I haven't." Well, why don't you talk to my realtor? So I'm just more reluctant now because I have worked with more than, I would say, about a handful of people that have come through a lending source that I use. And I got to pay them like 35%, and found out all these people went there because they came from my channel. And those are the people who the lender referred back to me. So how many went there from my channel? So it's just getting to a point where I'm not going to, it's just hard to give people good advice, but I want to give you good advice. But your mileage will vary with lenders, okay? So some lenders want to be Walmart. So a perfect example, like, look here, this 30-year FHA, 6.22. Well, there are some lenders out there who may be charging you 5.5% with no points because they say, you know what? I will sell a bunch more loans and make less money, but I'll be Walmart. Then there's somebody who may charge you 6.5%, going like, I'll just sell fewer loans and make the same money. It's just the way it is. Okay. I'm just telling you how the loan market actually works. And that's how it works. Okay. But it makes a huge difference for you. So sometimes you're going like, oh, I could buy this house like right now. Look, they're 485, right? For the median price. And let's say you're looking at a 3%. Well, we'll just do FHA, 3.5% loan, and we're looking at 6.22. Now, we're not going to talk about the MI right now. We're not going to talk about property taxes, which are going up, or homeowners insurance, which is going up like crazy right now. We may talk about that some more. And we just calculate that, right? 2872 is your payment. But let's say you found somebody who did it for 5.5. What's your payment now? Look at that. So sometimes it's more powerful to look for the interest rate. Go back to that same 6.22, but you got this house for 475. Oops, my bad. It barely made a dent. So your interest rate is so important. So just let's get this back to apples. And you go back to when interest rates were down like this. Look at this payment. Look at this payment. Huge difference, huh? Huge difference. And that's what you get when you look at interest rates over everything else. And the reason I want to talk about that for a sec. Now, I'm not going to say which builder, and this is why I like stress these new home builders a lot lately, is there's a new home builder. They have not officially announced it yet. So I can't say who it is. They just did a forward commitment. So this is a permanent rate buy down on FHA loans. 3.5%. So they're going to be doing 3.5% loans when you buy a home from them. It's probably going to be announced for next month. I can't say who it is right now. Y'all reach out. We'll talk about it, okay? I'm just going to say that much. So just look. Hold on. Let me just show you for a second here. So we're going to look at that 6.22. We're going to have to do some engineering here. Oops, I had that as refi. Doesn't really matter. So 2872, right? Now, first of all, we're going to have to look at the FHA loan limit for Clark County. So I'm just doing it over here. So it's 524,225. That's the loan limit, which is actually, you can borrow higher than that, but we're just going to call it 435 right now. So let's try 535. Let's just see what happens if you lower that down. So 535. So remember, 2872. We get this down to 3.5%, which is what they bought down to. This is unbelievable. You think there's a difference between having a $485,000 house and a $535,000 house? Yeah. Oh, and by the way, they'll still be putting some money towards your closing costs. There's a huge difference between that. So that's something to consider. The president of the company, if you look at the newspaper from, I believe, yesterday, day before yesterday, I have a clipping here, but the clipping may give it away which company it is because I just said she. Because I was at the event. They actually just barely missed me in the photo. I was like mad as hell. I could have been in the paper yesterday. Uh, uh, yeah, it was just good. It was some good information, and I may as well talk about that. So I've said this on this channel several times. There's only like up to 8 years of available land here in Las Vegas, North Las Vegas and Henderson, the area, to build houses for the next, I mean, just build houses, period. Um, that's it. Now, if you're here in the local area, you hear all this talk about, well, the governor and the legislature want to work with our Congress people to make the federal government give up land, because you see all this desert. You look around, you see desert, desert, desert. It should be easy to build, right? Well, there's certain restrictions, and I don't just mean restrictions. I mean certain dirt you can't build on. Well, the actual land that the federal government still holds, the BLM, Bureau of Land Management, that is actual buildable land, that is actually good to build on, even if they gave it to Las Vegas tomorrow, or the builders, it's less than the size of Summerlin right now. So all it would do is give us another 2 or 3 years of buildable land. That's it. There's nothing else. All the stuff that the governor and the legislature is talking is smoke and mirrors to make you feel good. So at best, maybe they can stretch it out until another 10 or 12 years total. After that, there's nothing more. That blew me away. Blew me away. And then I learned so much yesterday, and I want to put together another video just talking about what I learned, because Just because if they turned every piece of land over to the builders tomorrow, they can't build on it. Uh, what is there's like a term they use. There's a whole bunch of stuff they got to do, and you can't just go build on the land tomorrow. There's just, I mean, just figuring out all the planning, the running of the utilities out there. It takes years, years. Just blew me away. So it's not as easy as they make it seem. Yeah, we'll just release land and you'll have affordable housing. You really think you'll have affordable housing if they build that? That's why they're starting to build more multifamily housing. And by the way, that buildable land, that's not just housing. That's multifamily housing. That's commercial space and warehouses and malls. Because when you build a house, you want to be able to go to the grocery store and you got roads and all that stuff. All that stuff's got to be taken into account. Boom. So it's not going to be all housing. Something to think about. So next one, I'm going to get into this. This is going to be the boring one, but it's really interesting. Get my notes here. I got it kind of like zoomed out, and there's a reason. Uh, I'm only supposed to be showing you the graphs here. So make sure I'm looking at the right ones. Get my notes here. Okay, so I'm going to be looking at this graph here. So this is showing is now this is actually for I talked about, I think last month or month before last. I'm now subscribing to this this service. Is actually by an economist, so they're going deeper into like the numbers of the the housing numbers. So now we're getting into some real nerd stuff. So right now in March, it has taken an average of 88 days to sell a house. And that is the slowest market we've had since 2019. Don't forget, last year we've had the lowest number of sales in like 30 years. Now, that is a big jump from last year, which was 55 days and 66 days in 2023. And more homes are starting to sit on the market. And you've already seen it from what we just went through. We're starting to have more price reductions. So if you're selling a home, expect it to take a bit longer. And buyers are starting to take their time, and price reductions are starting to become more common. And that's not just here, but nationwide. So we have a completely different market than we had in the la times of 2020 through 2022. So this next one here, bring this down a little bit. Okay, so right now, based on when this graph was produced, there were 7,617 homes for sale. That's a 56% increase from last year. That is the highest inventory level since they started tracking this in 2022. More homes are listed, but the demand isn't keeping up. And this is meaning more competition for the sellers. So with more homes on the market, that means more options for the buyers. The sellers need to be more realistic. Prices and pricing aggressively and making homes move in ready will be key to standing out in this growing inventory. I've seen this just last year and even this year. And also with certain types of homes. Like last year, I took 2 listings in the same week, almost the same day. One house sold that weekend with multiple offers. The other house sat on the market for weeks and months and months. And the house that sold that weekend was move in ready. I had people lined up, multiple offers, people just begging. Other one was just regular. Don't be regular in this market. If you are and you think you're going to sell quick, oh, good. Yeah, you're going to have some issues. Okay, so next is going to be So we're going to look at the 30-day pending sales. Hold on. Am I looking at the right one? So that was the market timing there. I'm sorry. This was the last one we talked about. These are the pending sales. I'm looking over here. Okay, so we have 2,588 pending sales over the last 30 days, a 3% drop from last year. It's the lowest demand level since they began the tracking. Only thing that may boost demand is the mortgage rates are dropping. They are dropping right now. So I'm sure you've seen these massive drops. By the same token, you see what the economy is doing. If you're not tracking the stock market, you should be, because the stock market is down like crazy. And trust me, people are not going to be feeling rich right now, because I'm feeling poor as hell. I ain't gonna lie about it. I'm feeling poor as hell. So if you look here, prices at homes for under 400,000 are selling in 84 days. Homes over about 3 million, as if someone cares, take about 359 days to sell. That's well over a year. Mid-range price homes from 400 to 750 sell between 71 and 86 days. That's slightly better, but still slow. The most expensive homes are sitting longer, as buyers in that price range are waiting for better deals. If you're buying under 500,000, the homes are still moving, and luxury buyers, there's lots of inventory out there waiting for you. But remember, Las Vegas has become a luxury hotspot. I think that's enough for you guys today. But you can kind of see what's going on. So these are the market time reports for each of the cities. Amount of time it takes to sell. Wait, come on. Mesquite, 201 days. North Las Vegas, 67 days. Laughlin, 181 days. Las Vegas, 90 days. Henderson, 87. Boulder City, 74. And it's actually getting better for Boulder City, better for Henderson, a little bit better for Vegas, much better for Laughlin. It's getting worse for Mesquite. North Las Vegas is it's actually getting way better. Okay, that covers those. Just some wrap-up stuff from the builder forum from this week. Multifamily is the new entry point right now. So start thinking about those. You can get into those in the 300 range, but remember, take a look at those HOAs. They can kill you. One of the things I'm starting to see, and I should have covered that tonight. I'm probably going to save it for my big market update I may do tomorrow to put out, the regular video. Condos are starting to have a problem here in Las Vegas. Remember what happened in Florida with the one that the condo that collapsed? Well, that was because of deferred maintenance. Well, it seems like the HOA knew about the problem for a couple of years. They just didn't get to it because of deferred maintenance. And they were having board meetings trying to figure out what they were going to do, how they were going to fix it. Well, it just never got to. And you saw those people died. Well, you can't give a condo away in Florida right now. Well, same thing's starting to happen here. And you're starting to see some of the condos. Their HOA fees are just going up and up. And I mean, like every few months, it's like, okay, we're going to be raising that HOA again. And they're having some real problems selling right now. And now there are some other issues that are starting to happen in condos here, especially the older condos. Newer condos, you don't have as much of an issue, but these older condos, You need to start looking at them right now. Uh, or not say looking at them. If you're out there like shopping for a condo, let's see if I got my notes here. Hold on. That's the problem. There's real estate. I can make a video a day that's an hour of what's going on with stuff, and it wouldn't even be enough. Let's see if I can find this. So I don't know if you're going to be able to find this article. I've got to pull it up myself. The looming condo crisis: how rising costs and deferred maintenance are squeezing owners. This is nationwide. Let's see if I can read it. The real estate landscape. So I took a screenshot. Particularly in areas like Florida and Miami, is undergoing a seismic shift as condominium owners are grapple with mounting crisis, blah, blah, blah. Anyway, we're starting to have issues like that here in Vegas. And there are a lot of issues you're going to have to start looking at because, especially if you're looking at condos that are like, have already been pre-approved by VA, pre-approved by FHA, which are very few. And I'll probably have to do a new video on those condos again. They're going up through the process, and then the VA and FHA is going like, yeah, I know we approved these, but no, we're done. And all this stuff is flowing from the stuff that happened in Florida. Yes, like, no, we're done. We're not going to approve this. Yep, your loan's done. And this is starting to happen like in the last few months. This is just starting to become like this big issue. Also, start looking at your insurance rates. They're going up like crazy. If you're moving, it doesn't matter where you're moving from. It doesn't matter where you're moving to. Insurance is going through the roof right now. Oh, I got some books here. Insurance is going through the roof right now. Another thing that's going through the roof is your taxes. Just between insurance and taxes. Remember, the entire purpose of owning a house is to save money because you're kind of like buying a fixed, even though you may buy more than renting. Then in a few years, rents cost more than your the owning of the house. Well, in the past year, my mortgage has gone up $200 just because of insurance and taxes. And from what I understand, I'm actually lucky that it's going up way more for most people. I mean, more people. I mean, it's ridiculous, and it's just and it's worse, and it's worse in other states. California, oh my goodness, they're about to. California, they're about to just get slammed right now. Florida's getting slammed. Texas is getting slammed. East Coast is getting slammed. Um, California, they are about to get after the Palisades, and a lot of our increase is just coming because the insurance companies want to make up for their losses in California. It's just getting ridiculous. And it doesn't matter who you are, it's going to get passed down to you, even if you're a renter. They got to pass that down to somebody. And it doesn't matter how much money you make. Every time I turn around, somebody's turned around and going like, oh yeah, we got to raise the price on this, and the other thing. I mean, cost of everything's gone up so much it's not even funny. Food's gone up, everything's gone up. So anyway, I did not have any questions tonight. I'm gonna keep it open for this thing is driving. I don't know why it does it some nights. What in the world? It's driving me nuts. So just have if I put my whole face into it. Okay, this is driving me nuts. I wish I had a way I could just click on it and make it like zoom in on me or something. Uh, I don't see any questions. There's plenty of folks here, but no questions. Please, anybody have any questions, please ask them. And I did not have a chance the last time. People asked some really good questions. Said I was going to try to look some stuff up and actually make some videos. I've been so dadgum busy, and all honesty, I don't know if you can tell from my voice, I've not been feeling well still. So I didn't want to make any videos while I was all phlegmy and everything. Come on now. Somebody asked me a question. Okay, I'm gonna leave it open for 3 more minutes in case somebody has a question. And I will go as long as people have questions. I want to make sure everyone gets their questions answered. I think I've covered everything about what's going on in Las Vegas this week. Uh, some of the questions that were asked on the panel from the builders. Basically, someone said, "Do they think the prices are going to remain steady, go up, or go down?" It was kind of like a chuckle from the panel, and that's when they went into the buildable land, which we've covered before. That's when I learned about, even if the government were to release all the available land, the land that can actually be built on. Like, I didn't know this. I thought, all this desert. And I know there are places we can't build because we have Indian reservations surrounding us also. I thought, that would be a factor, but actual buildable land that, I don't know, maybe it has something to do with soil. Maybe it has something to do with soil or something like that. They didn't explain it, but they said with the buildable land, there's only about like half the size or something. Or I'll have to get my notes because I got to put these notes together because there was just so much covered. Um, but it's only going to add a little bit to what we can do. So at some point, we're going to just run out. We are landlocked. As a matter of fact, if you've been keeping track of what's been going on, Cashman Field over on the east side in 89122. Looks like Lennar should be buying that, and they're getting a fairly good price for it, and they're probably going to be just raising the stadium there. They're going to be building homes if we're lucky, and that's so we'll have some more homes over on that side. At least that'll be like something inside the city here, because they're right now everything outside the city has been spoken for. Uh, there really isn't much left to build on. If you just drive around now and you'll see every speck of land has been bought up and they're building on. You'll see builders now. You'll just these little bitty strips, and they're building new communities on these little bitty strips of land, these little bitty strips, because that's all they could get. They'll put 10 little houses on them. That's all they can get because that's all that's left. Everything's been spoken for. And little tracks you see out there, it's like, oh, maybe they could put houses. No, that's for commercial stuff. We are done, man. I think what's going to happen next is, older sides of town, they're just going to start buying them up, raising all the houses and building new stuff there. But the problem is, where are those people going to go? Again, those people got to go someplace. Um, when, from the time I got here, when I PCS here from Hickam to now, there's like an extra 500,000 people. I used to, I'm not going to tell the full story, but I've gotten used when I go to Henderson or something, for the most part, I take the 215. I don't take the 15. And now it doesn't even matter because it was like, smooth sailing. I just drive around. I didn't care. Now there's traffic jams. So yeah, this place is grown. It is growing, and it is getting hard to get around. Okay. I've gone my three. I've done my 3 minutes, like I said I was gonna do. I hope you guys enjoy the rest of your night. I'll be back in a week or two, and I may go do more now that I have this service, and I'll get deeper into it because he's putting out some really great numbers here. Because it's really good to have an economist who's like really digging deep, and I got to see what all I can put out because um, he puts it out, and there's parts in here. I'm not going to sit here and just fluff it out because I don't know. You know, the service actually says, well, this one does it say it on here? Yeah, we're not. That's why I tried to blow it up and just show you the charts. No, he doesn't want the nitty gritty stuff because it's his economic reports. But this guy gets like super deep into the stuff that's going on. So that's why I leave it to the end, the nerd out stuff. But I may start doing more and trying to just parse out the nerd out stuff. Uh, it's you can just nerd out all day on real estate. It's so fascinating. You don't understand how much it drives our economy. Anyway, I'm going to go ahead and end it here. I hope you guys enjoy. If you come in later, if you want something you want me to nerd out on, I'll try. Um, that's all I got to say. Enjoy, subscribe, all that jazz.